Welcome to Barchart's weekly series of webinars to inform and educate you, the investor and trader, about all things Barchart and the world of trading. Today's subject, building a successful trading plan. Now, let's be frank, folks. Today's subject matter, well, it's neither sexy or exciting. But I'm going to tell you, without a well-defined trading plan, I guarantee you that you will eventually blow up your account. And I'm not talking about in a good way. Hello, my name is John Rowland, and today I promise to bring you some of my personal experiences, good and bad, and share with you some of my elements of a trade plan that I believe can make one a successful trader. For those of you who are willing to stick around today and hang in there, well, at the end, I will give you access to a core components of a trade plan for free. There's a little catch here, but all you have to do is plug in the pieces that fit your plan. Today with me is our faithful moderator, Jean Baker. Hello, Jean.
Hi, John. How are you?
I am fine, and how are you?
I'm doing great here in the Windy City.
Well, we're about to have a major snowstorm here in the Northeast, so don't be envious of my weather. So, Jean, we've worked together here now for about 6 months, and you strike me as a person who likes a plan. Is that true?
I would say so, yeah.
And is it fair to say that a plan gives you direction and discipline?
Of course, yes.
And when the plan things goes as planned, it gives you a sense of accomplishment?
Of course, John.
Yes.
Yeah.
Well, listen, trading plan is exactly the same thing. We want to have this discipline, this direction, and a successful plan is going to make us give us that nice, warm, and fuzzy feeling. And I was thinking about this and about things that I'm going to talk about, experiences. And it does say here in my profile that I've been in business for 30 years. Actually, I was thinking about it. This year will mark my 40th year that I've been in the trading business. So it's kind of strange how strange trip it has been. So hopefully you guys will enjoy some of the stuff we'll talk about today. Just a little business here. Just realize that the things that we're going to talk about today are more educational and informative, and that, again, all trading involves risk, and that any trade decisions that you make should be best on the advice of a qualified financial professional. And the things that I'm going to present to you, or the ideas or concepts that I'm going to show you today, that have worked for me, or I believe that are successful, might not work for you, or might not be fit in your trade plan. But I just want to give you some food for thought so that you can use these elements in building your trading plan, okay? All right, so what is a trade plan, right? What are the things that we want to start thinking about? Well, first of all, a trade plan is really just a business plan. We are in business for ourselves. How are we going to define our business? Now, if anybody had put a business plan together, there's things like, what assets you have, or what strengths your company has, or what synergies they have. But also in a trade plan, you identify, what are your goals, your mission statement, what are you going to try to do? How are you going to reach your customers? Who are your competitors? What are your weaknesses? How are you going to grow? All those different things. Our trade plan is exactly the same thing. It's a plan for us, for our business, and the business is us. Now, the other thing that I want you to understand about a trade plan is that it's a living document. In other words, it's always changing, right? It's always evolving, right? The trade plan that you have today is not the trade plan you're going to have 6 months from now, right? It's going to always evolve with your experiences and your growth. So what are some of the things that we're going to think about as we put our trade plan together? Well, it's going to be in depth, right? It's going to have a lot of detail to it, right? We're going to look at our personal objectives, right? We're going to be very honest with ourselves. What are our strengths? What are our weaknesses? For instance, when I've taught in front of the classroom, a lot of my students, let's say, were engineer types or pilots, and I always envied them because they had one of their strengths was they're very detail oriented. There's, it's all about lists, checklists, and they want to make sure that all the ducks in a row and all the I's are dotted and the T's are crossed, right? But then also that could be a weakness, right? That those folks tend to be a little bit less risk tolerant. They take less risk, right? They might miss out on some opportunities. Where I believe that I'm just the opposite. I'm not as detail oriented. I'm more about, embracing risk and taking risk on. But we want our trade plan to help us identify these strengths and weaknesses, our trader characteristics, what we think we're going to be. And you might be surprised that when you go down and try to figure out who you are as a trader or what the things that you want to do. And once you get into trading, you might realize, hey, I thought I was going to be a day trader, but you know what? I really like being a swing trader, or vice versa. Right. Our trade plan should offer us some guidelines, right? So how we're going to trade different asset classes. What are those asset classes going to do for us? For instance, stocks could be wealth building, and options could be managing wealth risk or hedging risk. Futures could be for income trading, right? So how are we going to look at the different asset classes? What are our risk tolerances going to be? How are we going to define our risk, right? Are we going to define it in a dollar value? Are we going to define it in terms of a percentage? But other risks, we'll look at other risks that we will need to be aware of. Our methodology, how are we going to go about our trade plan, right? What are the things that we want to include, right? My time of day, or when I'm going to trade, or how I'm going to educate myself. What assets that I'm going to trade, right? That methodology, right? The importance of a balanced methodology, right? What markets would the equity markets, for instance. Then my strategy, right? What am I going to put in my trade plan? How am I going to take trades on? How am I going to define my risk? And then I need a means to record or evaluate my progress, right? I want to learn from the things that I've done well. I want to learn from the things that I didn't do well. I want to grow as a trader. I want to gain knowledge. I want to gain experience. And a lot of the techniques and methodologies and strategies that you will embrace in the beginning of your trade plan, as you grow with an experience and you have this way to evaluate your progress, you will evolve and trade and become more successful. Now, a trade plan is a very easy tool to use, right? We were just going to set a trade plan out, and then we're going to follow our plan. Now, it only works if we follow it. And, there's always this expression that everybody has a plan. I think it was Mike Tyson said something, everybody has a plan until they get punched in the mouth, right? So it's really important that we understand that a trade plan is going to give us that discipline to make sure that we follow it. And it's only successful, a trade plan is only going to work if we follow it, right? Now, let's talk about an element of a trade plan where I set up a trade and I get stopped out, or I lose money, right? That is actually a successful plan, right? If my trade plan that I put in place, where I'm putting in a risk tolerance, where I'm protecting myself from greater losses, and the market comes and stops me out, right? You don't think about it as a losing trade. Think about that your plan was successful because it kept you from greater losses, right? And that our plan should also help us find this way to grow as traders, to evaluate, and to become more successful. How do I find that pathway to success? All right. Okay. So what is my purpose, right? So how am I going to trade, or why am I going to trade, or what do I want to trade for, right? Now, this is my primary objective, right? So it could be something as easy as a financial freedom, right? I don't want to rely on Social Security or a pension plan, right? Or, I want to add extra income to my current salary so I can do those extra things. I can do those nice things for my family. Go on vacations or travel or do some nice things around the house, right? Or maybe I have a greater loftier goal. I want to buy a new car or a boat or a vacation home, right? Something more materialistic. Or I could think about leaving a legacy to my children or to my grandchildren, right? I want to pay for their college fund, right? Those things that are going to satisfy me, right? How do I define those things? Or maybe I want to donate my time or donate my money to a charity or an organization, or I want that freedom so that I can spend time with my church group or help create a soup kitchen or whatever that is, right? What I don't want you to do is, and I get this from a lot of students, is they always say, "Oh, I just want to make money." Well, that's not a purpose, right? I want you to have something that you can strive for, right? So then a student will say something to me like, well, okay, well, uh, I want to make $1 million. Okay, well, we're getting closer there, right? We're getting a little bit closer to a good purpose, right? Let's not say I'm going to make $1 million or I want to make $1 million. Let's say in our trade plan, when I make $1 million, I'm going to do this. When I reach this goal, I'm going to do this, right? I want to create this connection between my trade plan and these objectives, a means to an end, right? So that's why we're going to need these different goals, right? So not necessarily monetary goals, but these more greater purpose goals, all right? So what are my goals going to be? Are they going to be financial goals or are they going to be personal goals, right? So when we talk about goals, we're going to look at different timelines, right? Long-term time frame, yearly, monthly, right? So maybe I'll say to myself, on a financial aspect is in 1 year's time, I want to make sure that I return X amounts of monies on, my investments, or I want to have a number of winning trades or a number of trades in different markets, right? And again, I think a lot of these longer term goals will directly relate to our bigger purpose, right? Our larger purpose. Intermediate goals, right? Monthly and weekly goals. Now, a lot of us on this timeline could think about maybe some financial goals. In other words, we could say, I want to make X amount of dollars over during a month or during a week. I like having dollar values for potential goals, but not for goals where I'm trying to strive for that every day or every week or every month, because if I fall short of them, that puts pressure on me as a trader. But I do like finding financial goals to help me manage some of my risks, right? That we'll talk about that in a moment, right? But on intermediate goals, we could talk about a number of winning trades, or my return on investment, or we could start thinking about things like, how am I comparing my trading versus, let's say, if I would just invest in the S&P, right? A comparison, am I outperforming the S&P? But also we can start thinking about those personal goals, my growth, my education, my experience, right? Did I follow my rules? Did I follow my plan, right? And was my plan successful? Maybe I have an intermediate goal that says, hey, I want to have 5 winning trades in a month or 10 winning trades in a month. Did I reach that goal, right? Or, I want to make sure that I learned something over that last month or that last week, right? Or did I grow with my experience? And then short term, right? Again, I like setting short term goals because I want to make sure that I grow as a trader, and this is a good way for me to monitor that. But what we can do is, if we're thinking about longer term goals, for instance, let's say I put a financial value. Let's say I want to try to make $100,000 in a year, right? I'm just going to put a number out there, and I'm saying that this is what everyone's going to do. But if I woke up every morning and said to myself, "Oh, I'm trying to make $100,000 this year," that's a lot of pressure on me, right? So what I want to do is I want to break it down. I want to make it very manageable. I want to make these goals attainable. So $100,000 over 200 to 250 trading days a year. Suppose I just trade 200 days a year, 200 into 100,000 is about $500 a day. So my daily goal is to try to make $500 a day. Now, again, I don't want to put that $500 weight on my head, because if I don't make $500 today, tomorrow I'm thinking that I got to make 1,000, and if I don't make 1,000 the following day, then I got to make 1,500, and that weight is going to get greater and greater and greater. I want to just trade to try to do as best as I can, and then what I can do is use that $500 daily goal as a way to help me manage my risk. In other words, if I'm up $500 a day, now I have some rules, or I have some permission to move my stops, to take profit, to lock in profits, where I will capture that daily goal that's going to get me closer to that $100,000 mark. So here's a story for you. I had a junior trader that was working for me, and it was his first week in the ring. And this particular day was a crazy, crazy day. The market was all over the place, big volatility, and any trader who have any salt to them would have made thousands of dollars, tens of thousands of dollars. And so it was the end of the day, and he was sitting at the edge of the pit. This was on the floor, and I go over to him, and he looked like his pet dog had just died. And so I went over to him, being the mentor, father figure that I was back then, and I'd say to him, "Hey, Greg, don't worry about it. You'll make money. You'll do better. You'll learn from this experience, and you'll grow." And he looked up at me, and he didn't even change his expression, and he said to me, "Oh, I didn't lose money today. I only made $1,000. Right? He was disappointed that he only made $1,000 when everybody around him was making a lot more money. And I was really upset. I really wanted to just like smack him in the head. But I pulled myself together and I said, "Hey, listen, Greg, no, you didn't make $1,000 today. You made $200,000 today." And he says, "What?" I go, "Yeah. $1,000 a day over 200 days is $200,000. And when I broke it down to them like that in these smaller increments, it made a lot more sense to him. And he stopped worrying about how much money he made and just traded, becoming a good trader. And then eventually he became a very, very successful trader. So our goals can range from monetary to analytics, right? How I compare my to the market itself, or a value or percentage, or number of winners, or number of trades, win-loss percentage, and also this personal aspect. Did I grow? Did I improve during these different times? And so there's an importance of setting goals and rewarding ourselves when we set about our trade plan. And the reason why we're going to do this is we're going to set goals, and once we achieve a goal, we're going to give ourselves a reward. And a lot of times those rewards might be something very monetary or a materialistic reward. But we'll talk about rules of risk here, for example. So again, another example about rewards is, again, when I put a kid in the pit back in the day, one of the things I'd say to them is, you can't take any money out of your account until you make $50,000. Once they made $50,000, then what I did was I made them take $25,000 out of their account. And then from that point on, I would allow them to manage their account as how they felt they wanted to do it. But that goal, that 50,000 goal, was the reward. That was the end of the road. Once they took that $25,000 out, I also would tell them, was like, "Hey, all right, we're going to put $15,000 into another account that you can't touch, and that's for your business partner, Uncle Sam, and that you have 10,000. And that also made them realize that, it's not about money, it's about being consistent and successful over a longer period of time. But started setting about rules of risk, right? As I reach these goals, think about this like in terms of a video game, right? If everybody's played a video game, you know that as you go through different levels, you will have access to new tools or superpowers, right? Whatever. So what we can do for our setting our goals and this importance of rewards is we could say, let's give ourselves an opportunity to take on more risk or to take on more leverage based on reaching some of these short-term or intermediate goals. So one of the ones that I use in futures markets is I use this rule. It's called 2 times the initial margin rule, which says that I can add another contract, another lot on my position every time I reach 2 times my initial margin. So, for instance, let's say soybeans is $2,000 for initial margin. If I make $4,000 trading soybeans, then I can add another soybean contract to my risk profile, right? So I like setting those kind of goals that allows me to take on more risk, to embrace more risk. But maybe we could set a value, say something like, I'm going to start out with 3 markets, right? And if I have 10 winning trades in each one of those markets, then that'll allow me permission to take on another market. Or if I have a certain amount of strategies that I like, right? I'm going to make sure that those strategies are successful before I embrace a new strategy, right? So how we make this connection between goals and rewards, and what we're really trying to do is we're retraining our brain to look at trading as a positive event, right? Remember in psychology, they talk about Pavlov's dog, where he would ring a bell just before he fed them, and then after a certain period of time, that every time he rang the bell, the dogs would start to salivate, and that in psychology is called conditioned reflex. And so what I want you to do is set these goals, give yourself these rewards so that you condition reflex yourself that trading is something exciting, something rewarding for you to do. And that when that opening bell rings, right, I want your mouth to start watering for success, right? That you know that you're going to be successful or that you're on the path of success, right? All right. So I do see a couple questions are popping up here as we go along. So I see a question from Aaron about a trade journal. Yep, Aaron, we're going to get to that in a little bit. I see a question here that says, is there a profitable plan that you have? So yeah, again, we're going to look at things inside of a trade plan that are going to make us profitable, right? There is a lot of different techniques and strategies out there. Again, what makes me profitable might not make you profitable, or how you define profits as a trader might be different from what I am. So I don't want to go down that road. I have a question from JB. It says, doesn't your short-term goals tend to force you to trade or be impulsive? No, that's exactly what we don't want to do. We want to eliminate that emotion. We want to set short-term goals that are achievable, right, to create this connection between goals and rewards, but again, not putting that pressure on ourselves, making it all about money, right? We want to think about it in terms of other aspects, more analytical, more personal, and allows us to take on different types of risk profile, right? So what rules of risk will I set upon? What I'm saying? So when I think about rules of risk, as I add these rules of risk to my trade plan, I want the rules of risk, every time I add a rule of risk, I want them to accomplish one of 3 purposes. Now, many times when we add a rule of risk, it might satisfy 2 or maybe in all three of those purposes. And so what are those purposes? Well, the first one is we want to eliminate risk, right? Now, we can't eliminate all risk, right? That's not a reality, right? But we can do things to remove some risk, right? And the first thing that we can do is that all trades start with a stop. That's how we're going to define the trades, right? How much risk am I going to take on? So, but what are some other things that we can do to eliminate risk? Well, we can trade only liquid markets, markets that have a lot of liquidity, a lot of volume and open interest. We can trade when I have full attention, right? I want to make sure that when I go to trade or when I pick that time of day, that when I'm going to work on my plan or work on my strategy, I want to make sure that I have full attention, that I don't have any outside distractions that could take away from me and put me into a risky position. How am I going to manage my risk, right? So here, what we're going to think about is what are my tolerances, right? What leverage I'm going to use, what different markets and what leverages they provide, and how I'm going to use those leverages. And what I'm going to try to do is make this very mathematical. I'm not going to think about emotions, right? So yeah, we talked about, short-term goals could make you emotional. No, what we're going to do is we're going to set about rules, and we're going to make it very mechanical. We're going to make it very mathematical. Maybe I'll say something to the effect that my risk tolerance is based on a percentage of my capital, right? So for instance, in futures trading, I will only risk 2% of my futures account, right? So if I have a $25,000 account, that means the trades that I take as a day trader in futures, I only risk $500 per trade, right? But also inside of there, I will have an opportunity to leverage, right? So I might have a $500 risk rule, but if I can find an entry and set a stop where it only costs me $100, right? Well, now if I have the right amount of margin, can I leverage that position? In other words, can I take a $500 risk where I can have set a trade where I have an entry and exit that only costs me $100 of risk? Well, now I could take 5 contracts. How am I going to give myself that permission to take that second, third, fourth, fifth contract? Again, that could be related to how successful I have been, how much margin that I have put into my account, and as my trading plan works, as I gain that experience, that knowledge, that would give me permission to take 2 contracts, 3 contracts, 4 contracts, until I can get to that maximum leverage, right? The other things we can think about is, not only our position size, but, how many markets we're going to trade, and how many open trades we're going to allow ourselves to have, right? And so one of the things that we'll caution you is about, you can have good structure, good discipline in your risk management, but as you open more and more trading positions, you will become distracted. And it's important for you to understand your personal strengths and weaknesses. If you have, multiple stock positions and options positions and futures positions, that's a lot of balls to juggle. So you want to make sure that you have that time to make sure that you can manage all that different risk, okay? How am I going to profit from risk, okay? So we're going to eliminate risk. We're going to not put ourselves in risky positions. We're going to make sure that we have a stop. We have rules of tolerance and leverage, and we're going to make it very mathematical. But now what we're going to do is give ourselves permission, right? How am I going to maximize my trading profits, right? My permission to exit a trade. So I'm going to only look for trades that are going to give me a greater risk reward ratio, let's say 3-to-1 or better. Again, maybe as a day trader, I could think about starting a trade out as a day trade, but how can I maximize that day trade? So one of the things that I do as a day trader is I look at the market in the big picture from the aspect of a swing trader, but I will take risk and manage risk as if I was a day trader. But I'm always looking for ways to turn a day trade into a swing trade. In other words, how can I manage that position, keep that position open from a day trade to multiple days or even weeks at a time? So one of the things that I have in my trade plan is if I'm going to be a day trader and I want to turn it into a swing trade, well, first I need to pay for my risk. In other words, I want to make sure that the trade that I have on has paid for the risk that I initially took. Second, I want to make sure that I've locked in and put money into the bank that pays my bills. In other words, that daily goal. See, here's where we can use those daily goals at $500, right? Not as pressure that when I wake up in the morning says, hey, I want to make $500, but here I'm going to use to say, hey, I've made $500, right? Now I've put that money in the bank, I've taken a contract off, or I've sold out some of my shares, and I still have some positions still going. That gives me permission to go onto a swing trade. And then eventually, hopefully, that third contract or those extra contracts will eventually pay for my vacation or whatever greater goal that I have, right? And so in order to profit from risk as we manage our opens positions, it's important to understand that we can't do that if we're only trading one contract at a time, or maybe only 10 shares or 100 shares at a time. We need to learn how to start maximizing our leverage in terms of position sizing or multiple contracts, okay? All right. Let me see what we got here for some questions here. I see Stu asks, do you set limits on a number of trades a day? Yeah, Stu, we're going to get to that discussion in a second. I love when students or folks ask questions about setting limits. Orlando, yeah, we're going to look at some examples at the end of our session. It's asking to give us some winning strategies. Let's see. Gregory asks, what are the best markets for you personally? Again, Gregory, this is not about me, right? This is about you. You need to decide what are your personal goals, what is part of your trading plan, all right? Okay. So my rules of risk need to have details, right? They need to be very detailed and not only details, but disciplines, right? The disciplines of why I'm going to put these rules of risk in here, but also I need some disciplines to put in place if I don't follow my rules, if I break my rules, right? So again, one of the rules that I have is what I call is the 3-strike rule. And that rule says that if I have 3 losing trades in one day, that's it, I'm done. If I have 3 losers by 8:30 in the morning, that's it, I'm done. Because I know from experience, from my personal experience, that 4th trade, I'm going to try to revenge trade. I'm going to try to make more money. I'm going to try to get it all back, right? Who's done that, right? We know we all have tried to done that. So that's why I use that 3-strike rule. The other thing I use is if I have 3 losing days in a row, I will put myself in the penalty box. I will give myself a day off. Now, what I don't do is when I take that day off is I don't sit in front of the screen and watch the markets and point and go, oh, I would have had that trade, or I would have gotten that trade, or I would have been in that trade, right? I don't want to do that to myself. I want to torture myself. I want to make sure that I take that day off to clear my mind, to refocus, to make sure that when I come back, that I follow my plans, I follow my disciplines, and I don't make mistakes based on emotions, right? And then finally, we need some documentation, right? So when I discipline myself or I have these details in my trade, I want to have some rules that I can see and I can follow, and that when I come back to those, right, those who, what, why, or did it work? Can I make those adjustments, or are those rules of risk working for me? Do I need to be a little bit more tolerant, or do I need to be a little bit more strict in my process? All right. So Rondell asks, excuse me, it's Ronell asks a question is, how do you use a trailing stop order? Now, I will tell you that we do have a webinar which is called Futures Trading Risk Management, where we go into detail about using a trailing stop. But this is definitely one of those rules that I have in my trade plan that allows me to maximize my profits, moving my stop as the market continues to reward me, but it also lets me lock in profit so that I don't give back a lot. So I would refer to you to that section. So let me just pop through a couple more of these questions as I see them popping up. Let's see. Rick asks, can stops be placed in options? Well, really, options are limited risk, right? If you buy a call, your risk is based. That is kind of your stop. But you can use a price action to set a stop value. In other words, inside of, let's say, a break-even value, or price has moved against you on the chart, and yet the option hasn't expired. Couldn't you use a price target or a stop in the actual underlying to tell you to get out of your option? Yeah, for sure. That would be definitely something that I would think about. All right. All right, Jim asks, if you only use 2% of your principal of any trade, does that mean that you usually have 50 trades open at any one time? No. If anything, what it does is it really makes me look for higher quality trades. Now, yeah, am I diversifying my portfolio by using less of a risk tolerance? Now, again, that was for futures account. When I trade equities, I might use a 5% rule, right? Or if I have rules of risk that allows me to take on more, right? Maybe I might use as much as 6 or 7%, but I rarely go over 10% when I'm doing equity trading. And so it doesn't mean that I'm going to put all my money out there at any one time, Jim. So, actually what it does is this lower value makes me really look for greater trades, right? Because remember, I'm trying to find 3 to 1 or better, right? Okay. Okay, let's go back to here. Wake my computer up. All right. So I've got a lot of questions here about strategies, and I'm not going to go into details about my personal strategies, but I want to give you some food for thought in terms about how you can go about identifying opportunities, right? And again, the purpose of a trade plan is to eliminate those emotions, and that our strategy is going to help us do that. We're just not going to jump into any particular trade. So what things am I going to use to help build my strategy, right? So let's talk about fundamental analysis, right? What components that I'm going to use in my fundamental analysis, right? PE ratios, earnings, dividends, market cap, earnings per share, book value, whatever. What are those elements, that qualitative information that I need to allow me to pick my candidates, right? So here we are at Barchart, and right here on the front page, there's a lot of information, a lot of quantitative information for me to use as I start putting together my strategy, right? But even beyond here, beyond just the different asset classes and maybe just a snapshot of the overall markets that I might be watching, right? Or a watch list that I have, right, of stocks that I'm interested in, news stories that could be relevant to me or I have to be aware of that could do something or have an effect on my market. But even when I go to the individual stocks or the individual assets, right, what fundamental information do I need? Well, here we can see that I'm looking at Apple, and all the fundamental information that I could possibly need is right there for me very quickly for me to reference. If I also wanted to have more fundamental information, I could go in even deeper into that analysis. Or do I want to understand what markets or what sectors or what ETFs are relatable to this particular stock, right? Right? And do I have some support in my fundamental analysis, right? Can I look at earnings estimates or what other analysts are thinking about, and do their thoughts and do their analysis fit the same as my analysis, right? So I can go deep into that part of through the individual's stocks. But again, fundamental analysis is not necessarily particular to stocks or ETFs, right? We could be talking about futures markets, right? And if I go into futures markets and I pick a particular futures, let's go to a WTI, right? Maybe not a deep fundamental analysis, but I can understand about what are the different elements that I need to be aware of in terms of formatting my different opinions, or how I'm going to manage my risk, right? Or the margin or the pricing of not necessarily a fundamental analysis, but things that I need to know fundamentally about futures markets. As I put my strategy together, what technical analysis do I need, right? What things that I'm going to look for to help me not only pick the candidates, but to help me find my entries, right? My strategy. Why do I want to put money to risk? What are the things that I want to believe in? Trends, contra trends, candlestick patterns, Bollinger Bands, moving averages, time of day. Now think about this. As part of my strategy, I'm going to use time of day. How? Well, what time of day am I going to give myself to look at my trades? What time of day do I going to give myself to put myself in a position to take advantage of market price movements? So for me, I usually set my trades up in the evening the day before, right? And then when the market opens, that's the time of day where I believe the market is more out of balance, that price action is more likely to get skewed. So I only trade between 8 and 11 o'clock in the morning. If I don't have a trade on by 11 o'clock in the morning, I don't put any more trades on, because I know from experience that as the day goes on later, if I don't have a trade that comes to me, then I'm going to force a trade, or I'm going to try to get into the market, right? So I know from experience those trades usually end up being losers. Now, I will put trades on and then hold them to the end of the day and come back and look at the market, as we come towards the closing time of the day. That would be another time of day that I would be actively in the market. So what times of days am I going to set up my trades? What time of days do I feel that my strategies are going to be more profitable or more probable? Some technical analysis in terms of just liquidity, fund volume, open interest, those kind of things in my process, right? So what indicators will give me permission not only to enter the market, but to exit the market? So again, here I am in the futures section under the WTI, but under here we have our trade guide, right? And maybe I don't have an idea, or I don't have a strategy, right? Under our trade guide, if we go back to the main page on futures, right? Our trade guide is based on a strategy for you, a 9-day moving average versus an 18-day moving average. But if I'm trading stocks, there are multiple strategies that I can look at, right? I can look at, market momentum, or I can look at the top 100 stocks that are already starting to perform well, that are already trending well, right? Or I could look at top stock picks. This is a strategy based on that we're getting a technical price movement in one of the stocks that we're looking at, right? Which ones that could pop up. For instance, today this is Blue Links, which is based on prices are back above the 50-day moving average. That is a strategy, right? But even if I go to individual stocks, again, let's go back to our Apple, right? I do have trading strategies right there, right? And I can go in there and look at all of these different technical indicators, and I have past history. I can see how many trades. I have back testing to see which strategies work for individual different markets. But if I don't know strategies, or I don't know technical analysis, right? And I don't know what a MACD is, or a moving average, or a Bollinger Band, right? Well, we have resources available to us through our trade technical section here, and I can go in, and in here we have a library of terms, right? And this is, reference. Here's Bollinger Bands. How do we look at Bollinger Bands? What is the purpose of Bollinger Bands? What is the methodology, right? What is the math? And what is the common interpretation? So if you want to grow as a trader, right, or you want these strategies that you want to start looking at, or you want to start employing, here's that information for you, right? So what market indicators are going to give me permission to enter a trade, right? And what ones are going to give me permission to exit a trade, right? Maybe a changeover, or a crossover, or a change in momentum, or I see a big change in volume, right? That would be how we could manage that part of our trade plan. So let's see. I do see some questions putting up here about strategy. I want to spend a little bit more time on this, but we are getting closer towards the end of our session. So I want to make sure I got 2 more sections I want to do before we go any further. Nick mentions that you putting trades on between 8 and 11, and that at the opening. Does that mean you don't care about opening hour volatility? No, I really believe that novices, when I'm talking about novices, I mean uneducated traders, open the market. That's when they kind of make mistakes. They're using emotion to knock the market out of balance, right? All these new orders are coming in, and professional traders, we let the market get out of balance. And that doesn't mean I'm doing trades right on the opening bell. What I'm saying is between 8 and 11, that's when the market price starts to move. And you will notice this, that you'll see a lot of highs or lows for the day will be made in that 3-hour time frame. Okay, Nick? So just use that as a way to grow on your experience. All right. Aaron asks, would it be fair to suggest that technical analysis may be helpful in markets when trading options as an example? Well, yeah, I think in terms of technical analysis and options, options, we look for directional trades, or we look for non-directional trades. So one of the great technical analysis that we have is trend analysis, right? And is my market in an uptrend? Is my market in a downtrend? Is my market in a sideways trend? And if I have that strong technical analysis for the trend analysis, that will decide which option strategy that I would particularly use. Okay. All right. Okay. I see a lot of questions. I want to try to get to everything, but I am falling a little bit behind here. Okay. So let's go back to our slides. So I want to talk about some additional food for thought. All right. First of all, in my trade plan, we need a section that's called emergencies, a contingency plan when we have emergencies. Now, these emergencies can be technical emergencies, or they can also be personal emergencies. In other words, your power could go out, or your platform. I don't know who has had this experience. you're trading, a little box pops up and it says, "Oh, by the way, we want to update your platform, new software," and you're not paying attention, and the next thing you know, your platform is updating its software, right? And you're like stuck out there on a limb. You want to make sure that you're doing your software updates when you're not trading. But personal emergencies, right? Your dog is sick, or you got to take your mother to the doctor's appointment, or the hot water heater breaks, right? That is an emergency. What are the rules I'm going to have? Do I just take the day off, make sure I tighten up my stops, right? Maybe close out some of my positions. Some rules for that. Think about this, though. Remember we talked about goals, right? What have we said one of our short-term goals is we make enough money to buy ourselves a generator, right? And that would be a way to eliminate one of those emergencies, right? If my power goes out, right? So now we're satisfying two things, right? I'm getting gratification from my trading that's giving me something that I need, that's also eliminating a risk, right? So, think about it in that terms. Mental check-ins, right? This is important. I want you to talk about this. I want you guys to think about when you have the times sometimes where we don't want to trade, or we just don't feel it, right? You trust your gut, right? Again, from experience, I know that days that that you come in with a bad attitude, or you feel like I'm not going to make money, or I just feel like I'm not into it, right? Or the market's been doing things that I'm not used to. Take that day off, right? The casino's always open. The market will be there tomorrow. So let me give you a kind of a funny story. I'm driving to work, and this is when I was living in the suburbs of Manhattan, and I'm driving to work and going down the road, and I come to a T in the road, and if I turn right, it takes me to the train station, and then where I get on the train, and it would take me into Manhattan, to down where the exchange was. If I turn left, it takes me to the local golf course, which I was a member of. And this day, I just had this feeling. I just knew that I just wasn't into trading. I just didn't want to go to work. And I just knew that if I went to work, that I'd end up losing money. I just had that thought in my head, and I knew that was a bad thought. So I sat there at the stop sign, and I was trying to decide, do I turn right and go to the train station, or do I take the day off? So I pick up the phone, and I called my boss, and I let her know that I'm not coming in today for work. And she says, "Well, what's wrong?" And I said, "Well, I'm having car trouble." She says, "Well, car trouble? What's wrong with your car?" And I go, "Well, you won't turn right." So take this seriously. Take that mental aspect of trading serious. Technical and trading platform. Again, make sure they have the right technology, right? If you're trading on a computer, a Vista computer or something, and I'm picking on Vista, I'm just saying, make sure that you have updated software, that you're using a good computer, right? Your trading platform, make sure that, again, your software is up to date. Don't overtrade, right? This is my dot rule. And I want you to think about, in your own personality, how you would define over trading, right? Number of trades, number of positions, a number of markets, right? How would you define that, right? How many balls can you juggle at the same time, right? So every trader is going to be different on this one, but this is a crucial one for junior traders, those who are just starting out. Don't try to take on too much before you're ready for it, right? Gambling, right? Don't gamble, right? There's this FOMO, fear of missing out, right? Oh, the market's moving away from me, right? Oh, I got to chase it, right? Or, Jim at the cocktail party last night told me he got a tip on this stock, right? That's gambling, right? Without doing our disciplines, right? Making sure that we have right risk tolerances, right risk plan, right? Never add to a losing trade, right? That is a mistake, okay? Right? Who's done this, right? You bought, price goes down, and you're like, oh, well, you know what? I'll buy some more, right? I only need a small bump up in price for me to make back my money. Price goes down a little bit more and you add more to your position, right? Now you're just praying for the market to get back to break even, right? Who's been on their knees praying for market get back to break even? If a thought comes in your head, and this is the sentence that comes out of your head, I hope the market comes back, or I hope I don't lose any more money, stop trading. Close that position out, because you're not trading anymore. You're smoking hopium. All right. So take this one serious, right? Because these are the days when you are not disciplined and you keep adding to losing trades, that you're going to have these major blowouts, right? You're going to lose 25, 30, 50% of your trade equity because you are too stubborn to admit that you were wrong. All right. And that's what I want you to think about. Let's stop losing money, right? Let's stop doing the things that put us at risk, that make us lose money, right? For some of you who are starting out to trading, I get a lot of emails from you guys that are saying, hey, I'm just starting to trade. What are some things that I need to think about, right? Well, here's one of the harsh realities of trading. The first 6 months to a year is a learning experience, and that you need to first learn how to stop losing money, right? And so if in 1 year's time you are only up a little bit of money, or if your account has exactly the same amount of money as it had the first day as it did the last day of 1 year, I know that doesn't sound encouraging, but that actually means that you've been successful, right? You've managed that first year, that growing experience year, that, right? You think about restaurants, most restaurants fail in the first year. Most traders blow up in the first 6 months to a year, right? If I can get to the point after 1 year, then, and I learn how to stop losing money, then it's a lot easier for me to learn how to make money, right? I can start making more money, and it gives me time to put together a more successful strategy. All right. Okay. Finally, what did I learn, and how can I improve it? I need a logbook, right? I need to document all my trades. This is how I'm going to define my growth. I want to think about pre-trade thoughts, right? Why did I take that trade? What are the things that I was looking at? What indicators, what fundamentals did I use to give me permission to enter the market? I'm going to do a post-mortem, right? I'm going to look at what happened after I closed out the position. Not only the things that I did well, including the details of the trade, the entry, stop, target, right, and the dollar values, but also, did I take profit too quick, or did I move my stop too quick, or did I have too many positions on, or maybe I didn't have a large enough position. I had permission to take 5 lots and I only took 1 contract, right? So what did I do right? What did I do wrong? And how can I make those adjustments so I avoid those mistakes again in the future? But also, the next time I'm presented with that situation, how I can improve, and what refinements do I need to make to my trade plan, right? Remember, we talked about a living document, right? It's always changing with us, right? So one of the nice things about trade Barchart is under my portfolio section, right? Here's a portfolio that I have. Again, this one was one of the webinars we did in futures, where we only looked at take trades where we're using a 25%, a $2,500 initial margin markets, where I can take up to $5,000 in total margin, and how do I manage those different open positions. And so, for instance, here I have notes, and I put in the reasons why I took the trade. There's a contra trend trade where the price broke a swing low, and there was fundamental bearish news, right? Also, I'm going to remind myself that I need to roll over by the 18th. This particular trade was a momentum trade, right? The market was already trending in that direction, and now I have a swing target or swing high, and I can go in here and edit my notes. and I can set targets, either my stop targets or my goal targets, right? So these values, when price returns there, will send me a signal, right? The other thing that I can do is, we talk about time of day when I want to get ready to start trading. So here is one of my watch lists, right? And so one of the things that I said that I like to do is I like to set my trades up in the evening. So when am I going to get my watch list? So I'll get my watch list at the end of the day. I'll look and see, go through it. It forces me to take that time at that particular time when I choose to look at those different markets, to set up those different particular trades. Okay. All right. So I promised you a core of a trade plan, and I see a lot of you are asking those questions, right? Bar chart can be a major part of your trade plan. Let's think about this. Bar chart is going to be your research and information department, right? Think about it. You have all these facts and information and resources available to you on your fingertips, right? If you had to go out and do this on your own, this would be a difficult task, but it's there for you, right? So it's like having a research department, right? This is part of your business. You got a strategist, right? If you don't have any ideas, or you're thinking about ideas, or you want to come up with an idea, well, you have a strategist that'll help you think through that process. Fundamental and technical advisor, right? Your mentor, right? How can I grow as a trader? Well, I have site education. I can learn about how to use the tools and trade, but I have a reference of all the different indicators. I have these free webinars that we've been doing, right? And a lot of great strategy and trade ideas. And in a lot of these, the ones that I've done for you guys over the last 6 months, I talk about some individual aspects and some real world examples of what other professional traders are looking at as they employ these different techniques. There's a lot of information in here to allow you to grow as a trader, okay? Administrative assistant, right? Using those emails that I can get for my watch list, or setting targets or stops in my portfolio. Looking at the calendars, right? In the main section up here under the news, right? What events or earnings events, calendar events that I can use in terms of managing my trades, right? I want to be aware of an earnings report, or maybe my rule says I don't have any positions on the day the Fed meets, right? That's one of my rules. Maybe after the Fed I might put a trade on, but not before the Fed. I might think I'm smarter, or I might think I know what the market is doing, but Fed days are not the day that you want to start thinking about that you're smarter than the market. That logistics and that record keeping, right? That's one of the nice things about the portfolio, how I can make those notes, how I can keep record of all my trades, right? Not only my open trades, but all my closed trades, right? And the details, how many contracts I took, when did I put the trade on, what was my price, when did I exit, what was that price, how much did I make, what was my percentage, right? All those extra details, right? So here's the thing, folks. Plan a trade, trade your plan. Plan a trade, trade your plan. Okay, so I want to try to answer a couple questions here before we jump away, but we are over past an hour. I really want to stress to you guys how important a trade plan is. Hopefully you've gotten something from today's session. Again, put the pieces together, start thinking about the things that are important to you, your purpose, your goals, how you're going to reward yourself, what is your methodology, what strategies that you want to put forth, how are you going to document your trade plan, and how are you going to grow as a trader. All right. So, Gene, is there any questions out there that you find that are kind of common?
A couple things. A number of people are asking you to go back to your last slide with your logbook.
Okay.
I want to take a quick peek at that. So maybe if you can go back right there and leave that up for just a moment. A lot of other people are asking about a recording, and yes, you are going to get an email later on today with a link to the recording. We always post all of our webinars on the webinars archive page, which is part of the tools menu on the Barchart website. So you can go back and review a lot of the other training that John has done over the last 6 months or so by going to that webinar archive page.
I'll show that in a second, Gene.
Okay.
In a second.
Okay.
Because we want to talk about our next session. But I do see a couple of questions here. JB asks again, what should a reward threshold be for a small account, say a $10 to $20,000 account? Again, JB, if I'm going to use a 2% rule where I'm only going to risk, maybe $200 to $300 per trade, right? I think one of the very simple rules that we should start looking for as far as trading profitability or setting goals as a day trader, or even as a swing trader, is the reality of trading is that you're going to be in the beginning, you're never going to win every trade. That's not a reality. And the real reality is that at best, over a lifetime of trading, you're probably going to be close to around 50%. There'll be moments when you'll get above 50%, 60%, or you'll be below, down to 40%. So I want to look for trades of at least 3 to 1. Because that way I know that if I take only trades that are 3 to 1 and I get 3 to 1, that means for every one trade I'm going to make 3 units, and then for every 2 trades, or if I'm 50-50, I'm going to lose 2 units. So I'll still be a plus unit. Okay, so that would be a great rule of risk as far as trade plan. So here's one that says, what do you think on a standard deviation plan? Add some time and more as we go. So I'm thinking what you're talking about is, how do I use standard deviations or Bollinger Bands? I did a webinar on that one. I definitely like looking at much higher time frames. I think that's what that question is. So dailies and weeklies. All right. We talked about setting stops on options. The question here, Winnie asks, so will your rules change once you change from a trade from a day to a swing? Great questions, Winnie. My rules of risk will still be the same in terms of how I define when I exit my trade, but again, one of the students asked was using a technical trailing stop. As I have a swing trade, my rules of using my technical trailing stop, I might be a little bit more patient, let's say. In other words, if I'm day trading, I might move my stop a little bit quicker because I want to make sure that I lock in profit. But once I've locked in that profit, that daily goal profit that allowed me to turn it into a swing trade, maybe I'll only move my stop when my price, let's say I'm long the market, when my price moves above a recent pivot high or swing high, right? As my trend, it continues, then I might move my stop off of a recent swing low. That's kind of basically how a technical trading stop. So do my rules change? No, but the parameters of the rules, or the timing of the rules, or how much, risk that I'm willing to take, because I'm swing trading, I'm going to hold that trade for a little bit longer time. Okay. Again, I'm just going to try to answer some questions. I do know that we're a little bit over an hour, but this is my last session for the year, so I figure I'd give you guys your money's worth. You like that, Gene, right?
Oh, yeah.
Okay. So this is what Gene was talking about. In our tools, here's our webinars, and you can see that we are off. Gene and I are off for 2 weeks for the holidays, and we'll be back the first week of January. And the one that we're going to do is called the Dogs of the Dow. This is one I'm kind of excited about doing. It's a strategy based on looking at underperformers in the Dow and the bottom 10. And it's based on dividends. That's how we picked these dogs to Dows. But really the discussion we're going to have in this one is a discussion of the difference between momentum stocks and value stocks, or growth versus value, or defense versus secular stocks. And this concept of how the market is always rotating in and out, taking profits and looking for value. So I'm really excited about that one. And we'll have other ones that are coming up after the first year. Some of the ones that I'm not going to tell you right now, but I will hint to you that will be a little bit more strategy oriented, and I think you will enjoy the ones that we've got planned for January. Any questions that you see that I might have missed?
No, we've really gotten a lot of questions. You've covered a lot of information, John. The only other thing maybe I'm going to throw out there, because so many people have so many questions, is if you do have suggestions that you'd like us to cover in future webinars, we're always open to hearing what you have to say. So just drop us a line at webinars@barchart.com, or you can email your suggestion into our wonderful support group. They'll be happy to send that along to us.
Yeah, we love to hear from you folks, and certainly trading ideas. A lot of the ideas that we've been presented over the last 6 months have come from our subscribers. So with that, I do want to say I want to wish everybody a safe and happy holidays. And I want to remind you that the greatest of holiday gifts you can give yourself is when you help out somebody who is less needy. And so I'll leave it at that, and the good of all trading.
Thank you, everybody, for attending and for joining us today. And as always, thank you for using Barchart.com.